Hi everyone, and welcome to Coin Bundle Conversations in partnership with Tuesday Capital, where we invite you to learn about the stories of the leading investors and entrepreneurs in the blockchain space so that you can learn how to make the right investments yourself. Today, we are really excited to have Yida with us, who's the co-founder and general partner at Divergence Digital Currency Fund, as well as the general partner at Struck Capital. Yida, welcome. Thank you so much for joining us.
Thanks for having me.
Great. So Yida, just to start with, I know you started your career as an M&A banker at Morgan Stanley in New York. Mm-hmm. So tell us about that and how that led you to starting your journey as an investor.
Yeah, sure. When I first graduated from college, I really didn't know exactly what I wanted to do. So one wise professor told me to get a job in investment banking because it opens the door to a lot of opportunities afterwards, and maybe you'll find out what you want to do. Post 2 years in banking. So I went to go work at Morgan Stanley, and during that time, I actually found out about VC and wanted to get into that because I was a math and computer science major in college and wanted to be on the forefront of tech and be an investor for that. So I started off doing SPV, special purpose vehicles, when I was at Morgan Stanley in my free time. And what that really meant was finding deals. Initially, it was just with friends and family, and typically it would be a company that my friend from college or somewhere that I knew was starting, and then I would pull together some capital to invest in that startup. And so that was the first instantiation of my getting into venture.
That's really amazing. So This is like you're not too long out of college and you're already making your first few venture investments through special purpose vehicles. So that's really cool.
Yeah. It was a very natural thing, and I didn't know that it would turn into a full out fund. But initially, it was just a way for us to find companies and due diligence and get the experience, right? The diligence experience.
That's awesome. So then you've started making your first few investments at a very young age. At what point did you say, "Hey, I'm going to do this full time as a career"?
Yeah, so my partner, Adam Struck, and I started to do SPVs back in 2014 or so. And after about 10 of those, we had some interest from some of our investors in these SPVs to raise a discretionary fund, raise a fund for the purposes of investing in early stage seed companies. And so it was through that experience where it was a natural progression where we went from investing in SPVs to starting a fund from some of the investors that were part of our SPVs.
Okay.
And so that's when we started to do that, and probably in at the end of 2015.
So Yida, so you were a banker. Tell us about your first full-time venture capital job.
Yeah, so before joining my partner Adam at Struck Capital full-time, I wanted to get some more experience working at a larger fund. So I moved over to the West Coast and worked at NEA, New Enterprise Associates, which is one of the largest VC funds in the world. And I was based out in Menlo Park. And so there is when I really got that institutional investing experience in venture capital. And I was very thankful to work with a lot of different types of partners, and I really do think VC is a mentorship type of game, and so it's really important for you to have experienced investors to kind of guide you and be your role models and help you understand what are some key performance metrics to look at when you're looking at certain types of companies in a specific industry versus other industries, and so that was a great place for me to get the reps in.
Yeah, so that's great. So you'd already made some investments directly, and then you also got experience working at a large fund. Mm-hmm. And around that time, did you start evolving your own investor thesis and how you look at companies?
Yeah, so at NEA, it's a multi-stage fund. So we invest in both early stage seed startups, putting in $500,000 or so minimum to growth equity companies, and we're deploying tens of, if not, $20-30 million, right? So for me, it was great to kind of experience both types of styles, investing in early stage and late stage. And for me, I think what attracted me to venture investing was mainly on the early stage, because you can develop a better relationship with your entrepreneurs and have a more impactful way of helping the entrepreneurs.
Yeah.
Yeah,
That's great. So now you're working at NEA, which is one of the most prestigious funds in the world. At what point did you say, hey, I'm ready to go out on my own now?
Yeah, so I had an awesome time at NEA. Probably 2 years into it, I realized that I wanted to get some more experience, only focused on the early stage side. And my partner, now partner Adam, had the fund that I would join, and so after about 2 years, I left and joined Adam full time at Struck, and that's when I had the ability to focus 100% of my time on early stage investing.
That's great. So tell us more about your time at Struck. So you, as an early stage investor, you must get hundreds of pitches a month. So how do you filter through them? What do you look for when you're about to fund a company?
Yeah, so when you're looking at early stage investments, you do see a lot more. The top of the funnel is a lot more robust, right? Because there's so many entrepreneurs, especially in Silicon Valley, right, that are looking to start companies, and capital is abundant. So it's also very, very competitive. And so for us, I think one of the reasons why I wanted to get experience working on a larger fund is to develop a Rolodex, right, a deep Rolodex and a network. And in venture, right, your reputation and your network is really the most important things you have as a VC. So through that experience working at NEA, I was able to bring a lot of value in terms of a deep network in Silicon Valley, and what I mean by network is a network of fellow investors, both on the early stage and late stage side. A network of entrepreneurs that you can go to, and experts as well when you're doing diligence. And so for us, we get the best deal flow from some of that network that we've developed over the last couple of years.
Right. So it's all about like finding the right deal at the right time through recommendations in your network.
Yeah, and when you're thinking about making an investment, people have three general things that they look at, right? You look at the team, right? You look at the market, and you look at the product. And different investors valued those three things differently. For us, given that we're more on the early stage side, we focus a lot of time on the first thing, right? On the team, because for us, we think that in an early stage company, you're always going to have the pivot. And so the only thing that's constant early on is the team. So betting on the right team is very important. We spend a lot of time face time doing diligence, just being with the team, doing reference checks, and then just making sure that the experience is there to coincide with whatever they're trying to build.
Okay, that's great. And so you really get to know the team. Do you also find out about the background of the team from other sources?
Yeah, other sources, and really the first couple of meetings with the team, you can understand exactly how prepared they are for the task. So if they start to talk to us about the competitive landscape, right, and go very, very deep into it, it saves us time in terms of diligence on our end that we have to do on the market, but also it really shows us that they've really thought about what are some of the external threats to them, right, both sleepy incumbents or other competitors that are in the early stage side of things.
Yeah, so that's great advice for anyone who's looking to pitch Yida. Do your homework, find out about the market, come prepared.
Yeah, it's not good when we can list out 2 or 3 other competitors in the space that you've never heard of, right? When you come in.
Yeah, absolutely. And so that's great advice for aspiring entrepreneurs. What advice do you have for people who want to follow your path and want to break into venture investing?
Yeah, so for me, it was a very organic type of thing where we started off investing in our friends and then setting up SPVs because we needed to deploy more capital to meet the minimum check size for some of these investments, and then doing a full-on fund. So I would suggest folks who want to get into VC, break in, is just start investing, right? And it can be just a couple $1,000s, or maybe if you can pool some capital with some friends. And I think it can be a very natural thing where everybody has a network, so reach out in your network at first, your immediate network, the low-hanging fruit, and see who are some of the entrepreneurs in your network, and just talk to them and see if they need any help, right? You may not be able to deploy a check today, but you can still invest in that relationship, and hopefully it'll lead to a check that you can write.
That's great. That's great advice. So Ida, now you're an investor full time for several years. You're very embedded in the Bay Area, Silicon Valley network. At what point did you start getting interested in the blockchain space?
Yeah, so again, as an undergrad, I majored in comp sci, and from then I was able to really kind of understand the blockchain technology relatively easy after reading the seminal work by Satoshi Nakamoto. But I didn't really focus on it until probably when I started to do venture investing. I did a lot of fintech investing while I was at NEA, and when I learned about how there's this way you can send payments in a distributed manner with no security needed and very, very low fees, that caught my attention, because a lot of the fintech companies that we're looking at were trying to solve this issue of middlemen and how you can send payments quickly. So that was the first time where light bulb went off in my head, and I was like, oh wow, this could be something interesting, and dive a little bit deeper into it. And now there's a lot of other applications besides just payments, right? For what blockchain can provide.
So you started getting interested in it because it was actually solving a real world problem. At what point did you say, hey, as an investor, either directly in currencies or through companies, I should dive in as well?
So as an investor, right, I think crypto really started taking off last year, right? Before then, there were a lot of, old school investors in crypto that have held for a long time. They've gone through multiple crashes. And I think last year is really when crypto investing started to pick up. So for us, we've been personally investing in crypto for a while now, but really started to professionally invest in it by the end of last year. So we set up a new fund called DDC, Divergence Digital Currency, and that's the fund that we use to mainly invest in tokens.
Okay, that's great. So tell us about the inception of DDC. Were you seeing a lot of interest and interesting projects, and you decided to do this as a new project, or tell us about the inception of this fund?
Yeah, so there were a couple of heuristics that help us create this fund. One of them was the fact that we had a portfolio company on the Struck Capital equity side that got acquired by one of the largest exchanges in the world. And so through that M&A process, we were able to really learn about the different players in the ecosystem, right? The exchanges, the wallets, the different types of activities and interest groups in crypto. And through that, we got really close to some of these exchanges, and as a crypto investor, right, liquidity is king, right? It's similar to venture capital, but with more liquidity. You don't wait, 10, 12 years before your company exits, right? And what's important for a lot of these projects is relationships with exchanges and helping them get listed so that folks can trade their currencies and acquire them and utilize them for the utility of the specific network. So that was one of the heuristics, given our seat at the table with this new exchange that is going to be created. It's called SeedCX. It's going to be one of the first institutional crypto exchanges in the world. And given that we're on the board of that company, we have a good bird's eye view of what's going on in terms of regulation, especially in the U.S. Given that the team and the board, we speak to the CFTC, SEC on a really regular basis.
So let's talk about DDC. What type of projects does DDC invest in?
Yeah, so our strategy is mainly focused on the private sales side. So our thesis is mainly to bring some of our experiences in venture capital to the crypto space. Having been in VC for the last 4 or so years, we think that there's a lot of low-hanging fruit on how we can help projects in the crypto space. For example, media marketing PR is something that is very, very important for companies in the crypto space, and we have a team dedicated to helping projects with that. Hiring talent as well. We have a talent partner on our team that helps hire blockchain engineers, software engineers, and everything that you would need to get a crypto project off the ground. And for us, it's just natural for us to become business builders, given our experience on the VC side. And I think right now, in the crypto space, you have a spectrum of different types of investors, institutional investors. You have some of the older incumbents, larger funds that are traditional VC funds that are now trying to get into crypto.
Right.
And then you have, on the other side of the spectrum, folks that have been in crypto for a long time. They've maybe made 10 or 100x or 1000x on their investment, and now have started funds themselves. We see ourselves as somewhere in the middle, where we are. We come from a traditional VC background, so we can bring the company building experience and have the portfolio management experience, but also are pretty entrenched in crypto as well, given our personal investing in the space.
Right, that's great. And so there's in the crypto space, there's thousands of projects, so many ICOs coming out, so much noise. Out of all of those, how do you pick which ones to back via DDC?
Out of the three things that folks usually look at when they're investing in early stage companies, team, market, and product, we mainly focus on the team, even in the crypto space.
That's interesting.
And a lot of the times, you're only raising one round of capital, right? Maybe you have a private round and then you have an ICO round, but you're not raising series of investments like you do on the venture side.
Right.
And that's why some of these rounds are very, very large, right? They're raising $20 million, $30 million, $100 million at one time.
It's for the whole lifetime of the company.
Right. So that's a lot of responsibility, right? Especially for the team, right?
Yeah.
The team is, managing that, the set of a foundation, but at the end of the day, right, you have to believe in the team, the initial team. So we spend a lot of time doing diligence and making sure that the team and the makeup of the team is right for the project. And again, for us, we are fundamental investors, and so for us, we may not invest in the really large momentum plays that others will invest in, and we're okay passing on those deals, and we really focus on do we see ourselves working with this team, this company for the next, 5 to 10 years, right?
Yeah.
Like what we like to say in venture, making an early stage investment is a marriage, right?
Yeah.
So for us, we're focused on making sure that we back the right teams.
Yeah.
And a couple of areas that we are focused on in terms of different verticals within crypto, we like to make ecosystem plays, right?
Can you explain that a little bit?
Yeah, sure. So what I mean by that is that there are a lot of different verticals within crypto that you can invest in, right? You can invest in public chains. You can invest in anywhere from public chains to dApps, so the application layer, and anything in between. And for us, we also see the surrounding as very important. So what I mean by that are investing in kind of picks and shovels of the space, right? Investing in different types of exchanges, investing in different types of wallets, investing in content distribution platforms for crypto. And for us, I think, we don't know exactly which token, if there is one that's going to win out, right? I think we're still in the early innings of this space. And so it's very important to invest in the ecosystem, right? So we're not really bottlenecked by what public chain or which token wins, or what distributed ledger technology wins. If we can invest in the infrastructure and the ecosystem, I think our LPs will be happy.
That's great. And so in, say, for example, within the infrastructure, often people see two very competing projects that are doing very similar things. At that point, what's the deciding factor that makes you go after one versus the other? Is it the team, or is it momentum?
Yeah, I think we're a little bit too early to decide on one versus another in a specific space, right? For example, the stablecoin race. There are more than 10 different stablecoin projects today. And so I think as a prudent investor, right, you want to diversify your portfolio a little bit. And you don't want to invest in too many projects that are competing with each other, because your founders will probably not be happy with that. But I think crypto is still a very early stage industry where you really need to be prudent about how you diversify your portfolio, and even amongst different verticals, you want to have a couple of bets in each one.
That's great to hear, because that's one of the approaches which we are trying to promote through our platform too, which is you're not going to be able to compete with Yida on picking the right company. So try to have a more diversified approach.
Right. Definitely have a more diversified approach, and you want to also look at the terms of the deal, right?
Okay.
And you can have two great projects, but one of them could be valued at 10x or 100x,
Right.
and so you have to really think about terms, different types of lockups. You think about the terms for the founders. We want to make sure that their terms are aligned with the investors and the stakeholders of the project.
Right.
So we want to make sure that the vesting periods are long enough for the founders as well, so we know that they're in it for the long run.
Yeah, no, that's really important, because what I'm taking from you is there's all of this effort and due diligence that goes into investing into an ICO or token sale, which people need to do before they put their money into it as well.
Yeah, I mean, the interesting thing and the great thing is that there's so much information you can learn about projects, right? But there's also a lot of projects, so sometimes if this is not your full-time job, it can take a lot of time to even just read through one white paper, right? 20-page white paper. And a lot of times the white papers may try to intimidate investors into investing, because there's a lot of fancy math formulas, or the advisor page is very stacked with a lot of famous people. So I would say that investors should be wary, especially retail investors, when you're reading through the materials. And just try to get a lot of insights from others, right? Okay. So as a VC investor, that's one thing that we do well, is that we love to ask questions, and not only to the team, but also to others that may be also looking at the project, or industry experts in the space. So to the extent that you can do that as a retail investor, and just find different sources to confirm the validity of what they're saying and their materials, I think is very important.
Right. Now that's really helpful for everyone to know. One other point I want to pick up on is you talked about the price of the deal, which in traditional venture you can say, here's the valuation and this is the valuation I'm going in as an investor. How does that play out in the blockchain space? And is there an easy way where normal consumers can say, hey, this is too expensive or this is too cheap? Or how do you think about that?
Yeah, so that's a very interesting question, because in traditional VC, you can sort of get to a valuation that you're comfortable with, and there are a lot of deals that are in the seed stage or the Series A stage. So there's a lot of different kind of milestones that you're looking for, and also multiples, revenue multiples, or EBITDA multiples that you're looking at. But for crypto investing, right, the valuations are inherently going to be very, very high relative to the traction of the company, and that goes back to what we were talking about in terms of the companies are only raising 1 or 2 rounds, right? So if you're raising $50 million, you kind of have to pay up several years into the future.
Right.
So in terms of trying to do a DCF or free cash flow model on coming to a valuation in a traditional sense of valuation, it's probably impossible, or it's not worth the time. But there are also some ways that you can kind of have a sense of what the valuations are by looking at comparable projects in the space, and also maybe looking at the transaction volume of the projects. But a lot of times these ICOs do not have enough transaction volume or any at all. Right. They're pre-mainnet launch, and so for us, it's really just comes down to a range that we're comfortable with in terms of valuation, and then just really understanding what are some of the comps that are in the general similar space that we can see. Oh, this is a public comp that you can see in the space that has a market cap of X. We think that this is a market cap that this particular project can grow into. And try to get a little creative too sometimes.
Well, that's great. And I think that's where your experience as an early stage investor must come into play, because when you're making those investments, you're also saying, can this team build $1 billion company, which I'm sure is the same rationale in the crypto space.
Again, we think that crypto is just a more liquid form of VC. So for us, it's definitely really important to back the right teams in order to see if the project can become a multi-billion-dollar market cap project. Yeah. And the company will pivot, right? All early stage companies will have some sort of pivot. So for us, it's again really important that we focus on the right set of team members to achieve their at least goal on paper, and we know that we can back them, and even if the company changes, we'll have the faith and trust in them to get the job done. And for us, we will never really invest in a company if we don't think we can add a lot of value or effectively change the market cap of the company from the value that we add. Because there's, like you said, there's so many projects out there, and as an active investor, we want to make sure that we can provide value adds and not just be passive investors.
Are there any recent DDC investments that you'd like to share with our viewers? Because one of the things we've been telling people is if you can't do the due diligence yourself, learn from the experts and see what type of investments they're making.
Yeah, sure. So happy to talk to you about that. One of them that I think could be very pertinent to your users is a company called Trust Wallet, started by a friend named Victor. And Trust Wallet is trying to solve the issue today that we have with a lot of the crypto mania, which is a lot of people want to invest in crypto. A lot of people have crypto, but where are all their tokens located? Right. They're located mainly on exchanges. Right. So hot wallets, as we call it, and there's a lot of counterparty risk in terms of maybe the exchange gets hacked, or maybe something else goes wrong with the exchange and you lose your tokens. The other thing with having your tokens on exchange is that you can't really use those tokens that you own for any of the utility that the tokens are supposed to have. So how do you get the tokens in the hands of consumers, right, and have them actually utilize the token in the purpose that it was meant to have? And we think in order to do that, you need to make sure that the tokens are closer to consumers. And what do all consumers have? They have their mobile phones. And so Trust Wallet is a mobile wallet for holding ERC20 tokens and other types of tokens. And it gives you a really nice UI UX so that you can actually utilize your tokens using the dApp browser, the centralized app browser they have built in to their app. And they are about to do what we call in the industry initial exchange offering. So instead of doing an ICO, they will do a IEO, and they will partner up with an exchange. In this case, it's Kyber Networks to sell some of their tokens to the public. Okay, that's a great hot tip for people. Great, and this also speaks to your point around wanting to investing in the tools that build the ecosystem and bring more people into the space. Great. Final words, any interesting tip for someone who's trying to break into the space for the first time? How do you advise them to get started in crypto investing? Yeah, so getting started in crypto investing, so I think there are multiple ways you can do so. I think one of the things that really opened my eyes to just how early we are in this industry is when I first used a decentralized exchange. So these are exchanges that allow you to hold custody of your tokens, and you don't need to worry about the counterparty risk of losing your tokens. And there are a couple ones out there, IDEX, Ether Delta, Radar Relay, and going through that process of purchasing a token on a decentralized exchange, really can teach you a lot about, how for example, Ethereum network works, right? How smart contracts work as it relates to executing the trade. And so I would suggest people to maybe try their hands at using a decentralized exchange, opening up MetaMask on the web browser, and going through that process. And then there's multiple resources online that folks can use. And I think there are a couple of, I think also Twitter is also very good for learning about crypto. There's a couple of curated lists that you can find online of industry experts in the space, and you follow them. You can learn a lot. And what I really like about this crypto space is everybody is very, very open, right? And so another suggestion I would have is just maybe reach out to somebody in a forum or on Twitter or anybody who you may know is enthusiastic about crypto, and I'm sure they'll be open to telling you more about this about blockchain technology, about crypto investing, and about what they're doing. Because again, I think the general ethos in the space is we want to educate people, the general public, about the space and want to just grow this very, very nascent industry together.
That's great advice. Thank you so much for your time, Yida. I think we all learned a lot from your experience and appreciate you taking out the time.
Yeah, thank you for having me on.
Great, thank you.